Hey folks, Dan Ferrio here with your recap on what in the heck is going to go on in the markets this week that you might be concerned about or worried, or in this case, maybe really worried. Okay, so what I want to get to on my channel today is the economic calendar for this week, because I want you guys prepared on what to expect with going on with mortgage rates, thus what to expect in the housing market. I'm not going to tell you when to buy houses. I will educate you guys on how to buy homes. And what I do on my channel is I focus on the economics behind things, and that follows through with what's going on with housing prices and especially mortgage rates. However, if you really want to know, dive into the content of, how do I qualify for an FHA loan, or what's the guidelines for conventional financing, please check out Kyle Seagrave. He's a loan officer of mine that does a fantastic job on his channel educating you guys on the different programs, where my channel is more economics. I discuss the housing market and what's going on with the mortgage rates, and then I do dive into the programs, but Kyle's channel does a lot more of that than I do. So without further ado, let's get over to what the economic calendar looks like for this week. Then I'll give you my idea what's going to go on with mortgage rates. So we go over to the economic calendar right now, and it's basically a humdrum week other than Thursday. So to give you a little context of why Thursday is such a big week, we have the CPI numbers, that's inflation numbers on the consumer level, and we have jobs, initial jobless claims. How many people lost their jobs in the last reporting cycle? Why are these important? Well, these two pieces of the puzzle are mainly important because these are basically the two things the Federal Reserve monitors. They were created for two things. It was to help the economy create full employment. That's number one. So we're going to look at the initial jobless claims. And number two is to keep inflation in check, which is the CPI number, Consumer Price Index. And then there's also a PPI number, the Producer Price Index, which is the inflation number on the producer level. Well, this week you're seeing on Thursday, we're going to have the CPI numbers, inflation numbers coming out, as well as how many people lost their jobs. Okay, so why do we focus in on these two? Again, that's what the Federal Reserve's mandates are, but they also told us last year their goal is to inflict pain on those out there looking to buy houses and in the job markets. So what we're expecting here is, here's my thoughts on this information that's coming out this week. The Consumer Price Index is going to start coming down, okay? And I think it's going to start coming down faster than a lot of people think. And here's a little bit of good news in regards to that front. One of the big things or pieces of the puzzle when it comes to inflation was used car prices. I don't know if you remember, but about a year or two ago, used car prices were more expensive than new car prices because of the demand. Well, the demand for used car prices, or the cost of used car prices, is starting to plummet. Okay, so that's number one. The next piece of the puzzle is inventory. How many houses are on the market? Thus, we're going to be able to find out the supply and demand. Is there more demand? Is there more supply? Where is that going? So those are the things that we're going to discuss right now. So here's my expectations on the CPI number that's coming out. I'm expecting it to come in lower than the previous reading, and their expectations is to come in about 6.5. That's pretty robust, but I'll go with it. Okay, so let's get over these numbers I want to explain to you. The first number you're going to see here is this core CPI. That is, when it says the core, it basically, they strip out food and energy costs when it comes to inflation numbers. So they're going to let us know what happened in December, month over month, from November to December, how much prices went up, but they're going to exclude food and energy. But then if you want to include that, what you're going to do is just look at the normal CPI number. You can see that right here, CPI month over month, not the core. Okay, so this is what we're going to focus in on. I focus in more on this than the year over year. Why? Well, year over year, you're going to have the fall off. So let's say, for example, if you're discussing year over year from January to January, okay, what's going to happen is, if there was a big jump from the previous January or previous months, is those numbers are going to start to roll off. So let's look at it this way. We got January to January. Let's say January, or let's say February last year was a big move in the number on inflation. Well, when we go to February, we're going to look at February of 2022 to February 2023. That number is probably going to start really coming down. But then once you go one more month further, you're going to have the roll off of 2022 numbers. And that in itself is going to make inflation numbers look more calm. Okay, so hopefully you're understanding this. So what I usually focus in on month over month, I want to see where we were last month, then the following month. I want to see where we're going there. Plus, I do also look in the rearview mirror to see where we went year over year. So without further ado, that's enough discussion with that. So my expectations are the CPI number is going to come down. I'm going to have to agree with them on 6.5% because I think it might even be a little bit lower than that. That's number one. And then in the initial jobless claims, that's the area that's really confusing and really the battle right now, because last week we learned that there was almost 2 job openings for every person looking. So when you have that much openings in the labor force, it's really going to be hard to make the unemployment numbers rise. And that's one of the things that the Federal Reserve is really wanting to do right now. So that's what the expectations are. So let me give you my feedback. Here's what's going on right now in the markets. The MBS market is liking some numbers that they're seeing today, which isn't really that much stuff out there. The MBS market is up 19. So what are you seeing on your screen is basically the price of a mortgage-backed security. What is a mortgage-backed security? Well, good question. Mortgage-backed security is the bond that trades on Wall Street that's yield is the biggest component of your mortgage rate. It's not the 10-year treasury or some other index. It is the mortgage-backed security. What I want you to understand is when this number, the price of the bond that you're seeing on your screen, when the number goes up, mortgage rates are actually coming down. So we love when this number goes up. We don't like it when it goes down. Look at the chart over to here. You're going to see basically in 2022, it went down almost at a steady clip. But at the end of the year, we started upticking. So right now we see an up market. Mortgage rates, here's where mortgage rates are. And this is encouraging. I'm going to explain to you why. These are the top 6 products people use when they're buying a house, okay? You're going to see the 30-year fixed, the 15-year, the jumbo, the ARMs, the FHA, and the VAs. But I want you to concentrate on where the rate is. The rate right now is 6.2. All right. If we squeeze down into this cell, where we were in November was 7.375. So we are over 1 full percent lower today than where we were just 60 days ago. So the news now is starting to come in, and a lot of people aren't getting this. They're seeing the inflation still robust and everything else, but they're not realizing rates are coming back down. And that was my expectations. My expectations are we're going to see, volatility throughout the year. But we're going to get to a point where mortgage rates stick right around 5.5, maybe to 5.75% rates, and hold steady there. So I'm still expecting the rates to come down a little bit more. I want to let you know, though, if you've closed in the last maybe 60 or 90 days or since November and your rate's in the 7s, it's not too early or it's not too late to refinance to see maybe you can save some money. So what we did is we created a system on our website. You can go right here, go to therateupdate.com. It's right here on your screen. If you closed, what I'd like to do is for you to send me your closing disclosure, or just your CD, or just reach out to us and let us know what rate you closed at. And can we save you some money by refinancing? But if you're out there and you're like, hey, I really need help trying to get pre-approved, I would like to buy my first house, what do you need to do? Well, the first thing you need to do is right over my head. You're going to see you can book a meeting. That's what most people do. I have 13 consultations today, and they are loading up day after day after day. But if you want some immediate service, what can you do? Give us a call. I know it's cut off here, but all this information is down below as well. You can give us a call at 844-775-5626. We'd love to help you. What we do, we're actually a mortgage, I'll call us mortgage advisors. We are actually employees of a federally chartered bank, which helps you guys because that means we can help you anywhere in the country. But the caveat here is we are also a huge mortgage brokerage. That means we can use rates and guidelines and packages from other lenders. Do you realize we're set up with over 85 of the country's largest banks, finance companies, and mortgage companies to help you guys find the best loan program out there? So I hope you find value in my channel and you find some educational tools and you find it actually entertaining as well. So if we can be of any help to you, please reach out to us. Visit us at therateupdate.com. If you're a podcast, you like to listen to podcasts, check me out. Just check in the search engine Dan Frio or the Mortgage Update with Dan Frio, and you're going to find all my podcasts there as well. But we'd love to help you anywhere in the country. If you're looking out there to buy your first house, please reach out to us. We'd love to help. Thanks for watching. God bless. Have a fantastic week, guys. Bye-bye.